Shidim Shuri. It is Saturday, November 2nd, 2024. Let's get into it. All right. Let's start it with this. I think it's a good talking point to start this review. What you have here is the S&P, SPY, S&P 500 going back to September of 2007 through October of 2008. Why do I went back this way? Because you know the old saying, history rhymes, history repeats. What do we have here? You see this green line here? If you didn't know or forgot, the Fed cut rate by 50 bips in September on the same date this year as it was back in 2007. Yes, exact same date, exact. And that was one of the reasons I back off on trying to short the S&P 500 for most of September and October. I try, but I try to do it really high, and I keep missing it because I was being too cautious, which is okay. It's okay to miss it. I'm not a good shorter. In general, I'm not very good. Doing bear put spread have done okay, but not as good as I should be. Regardless, you see how the S&P 500, see this big green candle right here, reacted after the Fed cut rate back in 2007. It went up to an all-time high in when October 11. Keep that date in your mind when we flip to current time. Okay, I want to see. I don't have a memory. I know we hit an all-time high in the S&P 500 after the Fed cut rate, but is it going to be the exact same day? We will find out, right? So this red line here, for those that remember, is what was declared officially the starting point of the recession back in the 2008 2009 market crash. Okay, so December 3rd was the official date. It's ridiculous. It's ridiculous that the Fed later in 2008 came out with a declaration, an announcement, press release that, hey, by the way, this is December of 2008 and we had pinpoint the recession had started back in December of 2007. Absolutely lunacy. Backward looking. It's crazy. Okay, how the economy is run by so-called smart people is beyond me. They've been late forever, and they always late because they're always backward looking, never forward looking, never forward looking. Unbelievable. But okay, real quick, how did TLT behave over the same time frame? So let's do this. Let's compare the S&P 500 to TLT. Okay, the bond market. What was the bond market thinking back in the same time frame? Study, compare, we add in TLT. I can guess it already that it's not gonna be mirroring the S&P 500. Look at that. TLT went down. Okay, let's see. At the start, okay, right here is the start of the Fed rate cut. And then when the S&P 500 hit the all-time high in October of 11, TLT was down. Not a whole lot, but it's down. And then, of course, subsequently, it went up. Okay, so that's just a highlight of what went on with TLT. It is literally 80, 88-ish, I would say. Yeah, give or take 88-ish. So yeah, that was what October 11th was. Okay, all right. Let's jump to current time. Let's let's jump to current time, and we can remove everything else. This is current time. Let's remove TLT for now. S&P 500. When did we hit an all-time high? It was not October 11th. See, this is October 11th right here. So history rhymes, not exactly repeat. Okay, so the Fed cut rate in September, and then the S&P 500 hit the all-time high right there, right there, October 17th. So 6 days later, the history rhymes. All right. So now what? It came down Thursday hard, hit the 50 MA and bounce, but not really. It's not the kind of bounce that you would be pleased in, because at the end of the day, it is a red candle. Basically, it closed near the low of the day, Friday. Not exactly a picture of strength, right? So that's what happened with the S&P 500. So for now, history rhymes. Does that mean that the high is in? Yes. Before the Fed cut rate, I felt that the high was in for most market. Sure, there are market that I didn't think the high is in, like WM, IWM, and I was wrong on that one. But as soon as the Fed cut rate, and I went back and looked at how it behaved, how the SPY behaved back in 2007, then I see that it can have the same kind of reaction, and that's what we got 6 days later. But October 17th hit the all-time high and then back up. Okay, what now? I would not be. I would say be very careful. Sure, October is over. Here's the thing: selling pressure for the market, for the deep losers, took place uh, during the week. We saw that play out in plenty of bad name. Does not mean that they can't keep going down, right? So keep that in mind. Just because the October selling tax loss is over, let me explain things. Okay, one of the hardest thing for me to try to explain to a lot of newer participant to the stock market is what I refer to as market dynamic. There's a lot of dynamic that take place on a daily basis that is really out of technical control for some individual stocks. Just because a stock hit a support level or resistance level does not mean that it automatically go into the direction that it's supposed to go. Keyword suppose, because there are other dynamic in the market. For example, a substantial amount of money in the market is invested in what? The S&P 500. Whether it's Vanguard index fund, SPY itself, a lot of big stocks are included in the S&P 500. So when you have weakness in the S&P 500, even if your individual stocks are doing a certain way, it can still get dragged down by the overall market, right? And then that's just the way it is. It's in a perfect world, things would move from support to resistance in a straight line, up and down, right? But guess what? It take its time going up and down because there are other dynamics, and there are a lot of participants in the market that do not care about technical analysis. There are plenty. Okay, there are plenty of people that just buy and sell because they're in the mood. Regardless, okay. Hopefully that explain that explain why. Also, keep in mind, TA also fail when there is catalyst, right? If there's bad news, guess what? TA will fail. If there's good news, TA will also fail. Just because a resistance is at a certain level, but if the news is really good and people FOMO into it, there will be time where it will bust through resistance level. So TA is here to guide us into being disciplined. And we know that the market is often emotional. Okay, so that's what the key takeaway that we all should have is that TA help us make decision grounded without being emotional in the market. Okay, I think that's the best way I can sum it up. Okay, so the SPY, nah, I wouldn't be chasing it here. For those that trade the SPY, if you short it, congratulations. I would look to close it out if it come anywhere near the 100 MA. Yeah, can it come down there? Yeah, why not? Okay, why not? Would it be for me? I would definitely be interested if it come down to the 200, but as always, how it came down, the reason it came down also matter. But for me right now, it is a no touch. Dia also a no touch. Okay, that was the one that I would say I kicked myself the most for missing out on shorting because I tried multiple times and the order just never triggered because I was too cheap because I put in a debit because it's a debit, it's not a credit trade, it's a debit trade. So I think I put in a debit and I think I was off by maybe 25 cents on a trigger. So yeah, unfortunately that didn't happen. And yeah, that was the right strategy. Just did not execute it well at all because I was going to do a short that go out a month. Didn't happen. Would I touch it here? No. Would I touch it for those that like to buy Dia? Channel low. Okay, so because it's trade in this channel and the channel low is slightly below the 100 MA. So yeah, if it come down to the 100 MA, if you want to nibble, add to the channel low, that would be the spot. That being said, if you are in the camp that believe that we are heading into a recession in 3 months, 6 months, heck no. Okay, if you are in that camp and I am in that camp, I'm just pointing out the technical spot that if you want to buy, you can or should. Personally, I'm not. Personally, no. Hard no. I'm not in the camp that believe that everything is all good. Okay, I am in the camp that things are much worse than they are painted in the media right now. Much worse. QQQ, same thing here. Okay, came down. It touched almost, not quite, but no, it's a hard pass for me. Okay, I'm not. I had a few QQQ that I sold up here, so I'm out of QQQ. Would I buy into QQQ long term wise? The answer is yes, but it would have to come down to a significant lower level. Okay, so for me, it's a no touch right now. Where? The 200. I like the 200 lining up with the fib, the 50 fib. Yeah. The 61.8 fib. Yeah. I would consider everything from the 200 and lower for Q. Out of the ETF that I just showed on the major indices, QQQ, I'm more likely to buy at the 200. No rush. Okay, no rush. We will see it. We will see it. If you are bearish on the economy, we will see it. IWM, yeah, seasonality saying it's time to buy. If you want to take a fly at the 100 MA, should it retrace down there? It's kind of lined up with Reflow right here. See this? That line up with the 100 MA. So if you want to take a flyer there, you can. I might, given it's roughly 5% below the high of the year going to Christmas. If it come down there in November, between now and Thanksgiving, if it pull back into that, then yeah, I might grab a few shares myself. All right, let's move on to what we skipped over in the beginning. Ugly week. It's been an ugly month for TLT. Make no mistake. Okay, I can't be happy about it, but at the same time, it is what it is. Hey, it was really nasty. Look at what things look like. Okay, so last November, oh, history rhymes. Look, let's go back. Okay, let's go back. Um, let's do 2 years. Where did TLT hit the bottom last year? Where? Okay, that's a question. Where was the bottom? What did I do? Did I mess up? Let's. What did I do? Okay, so this is a 2-year chart. Last October, right here. All right, so let's zoom in on last October. The low was October 23rd. All right, October 23rd was the low, and then up it go. This year, not so, not so. Okay, and I don't have a smart answer to tell you. Sometimes things happen and I don't have the answer, and this is one of those occasions where I said I have no idea who would be selling TLT here. I don't know. Could it be somebody under pressure? Could it be Japan Bank selling? It's possible. It could be an entity that is heavy. Okay, you're talking massive volume. Look at this. Okay, let's take a look. That's heavy. Okay, this is heavy. Was it tax loss selling? Absolutely. Okay, when you see rising tide, rising volume going into the last 3 days of the quarter. Okay, so it was not light volume. It was definitely above average. And then yesterday you have massive, massive. Is it the most volume? No, but it was definitely very heavy going back to early August. So that's not, I don't have a smart answer. I don't have any kind of logical answer on why anybody would be running out of TLT at this point. No idea. The econ data was bad, but it's also not good. It's like I said, I'm dumbfounded for the one of the few occasions where I literally cannot explain. Right, so it is what it is. Short-term pain, long-term, I'm not concerned. All right, that's my best takeaway I can tell you is, am I disappointed that I have big exposure in TLT? Absolutely. It would be silly to say that, oh, I have no disappointment on TLT. Yes, I do. But at the same time, I'm just like, not much you can do here. Okay, not much you can do here. Uh, do I see TOT come down to something crazy like 87? No, but let the econ data play out is my advice. Okay, let's talk Max 7. Tesla went up to the all-time high, reference high. I said it's time to go. I hope people took the advice and go away, even with the good news. Hey, hats off to Elon. Okay, I no doubt the one of the greatest modern innovator of our generation. It's hey, he managed to just kill the shorts. I'm sure the shorts he has destroyed a few short. I think Jim Channel. If you go on YouTube, there has been a famous shorters. I think his name is Jim Channel. That was keyword was on CNBC for many years, pumping his chest on shorting Tesla. And a few months back, he imploded. He closed his funds, uh, and he's not alone. There had been many big shorters that hated Tesla, and Elon make them pay years after years after years. But for me, no touch. Okay, easy peasy. Apple, no touch. I have nothing good to say about Apple. Nothing bad either, but nah, it's better place to put your money. At the end of the day, I don't see a compelling reason, right, to own Apple here. It break down below the 100. Can it come all the way down here? Yeah. What would be the catalyst? I don't know. I'm dumbfounded at the catalyst, if there is any. Netflix, impressive, impressive. Would I chase it here? No. Would I buy Netflix if there is a correction and it fill the gap? The answer is yes. That's the one that I would like to get in, but I can live without it. Okay, but 10% lower at the gap fill, we will talk. Okay, until then, no reason to chase it here. Meta, Meta. Um, great number, but what the market did not like was they guided higher expenses, higher allocation to the virtual media division, whatever they call it. But no, it's Meta is printing money. They are making lots of money. The market would rather say, "Hey, we increase our buyback by 20 billion over the next 2 years." That if Meta said that instead of saying, we will increase expenses in the metaverse, I think Meta would have had a complete opposite reaction because they have great numbers, just as I expected from all the political ads. But no, Mr. Zuckerberg decided to triple down, quadruple down on the metaverse. So it is what it is now. I did not trim any Meta. I had ordered to trim at the all-time high, but it did not happen. It's okay. Most of the Meta I have, I don't mind holding. Okay, I don't have a huge position. Google, I did trim, and I'm glad I did. Google, great number. I trim 181. The gap fill was my spot, and I did, and I did not regret taking 10%. I I had a plan to let go half of my Google. because those half was acquired here to here, mostly in the 160 range. So I bought as low as 150. I think the lowest I paid was like 156 because I had ordered in to buy at the 200 MA, right? So, but the average cost of acquisition of those shares was 160-ish. So I even bought here. I even add to Google down here at 161. So yeah, I was a big fan of Google over the past 3 months, and I trim, even though it's 10% of my Google holding, it is I would say 25% of the share I want to sell. So it was a good size trim, which I'm pretty happy about because Google has retraced back to before earning. Um, Not a good thing. Okay, not a good thing. Um, Part of me wish that I put a stop, but what happened was on earning day, sure, the trim order next day pop, and I was looking to see if I can put in a stop at the low of day, but then it did this the next day, and I'm just like, oh geez, that's not gonna happen. It filled the gap, right? So by then it's too late. It bounced off the 100. Nah, would I trim more if I see up here? The answer is yes. So for now, I have a trim order in at one at this right here, 177.28. So if the market decide to bounce back again next week, I will get out another 25%. All right, up here. But for now, um, if if it goes up somewhere up here, I then will put in a stop at the 172.81 because I'm not gonna let it come down to 168 without getting stopped out. I will look at restock down here in the mid 160s again, but I would rather take my profit up here and be happy with it. Okay, Amazon, time to go. Right? It's I had a few share, very small, and I sold it at 200. Okay, it's I had an order in, not many share. I said, time to go. I don't care. Right? I would not be chasing Amazon here. Would I buy it back down here? Yeah. Come down to the channel low, 180-ish, the fib. Yeah. Even mid 180. Okay, I would consider buying Amazon right here at the 50 MA. Yeah, I would. But for now, no go. Okay, no go. Nvidia, I did trim last week. Um, at this point, I'm more inclined to raise my stop. I had a stop, but it's down here at this fib. I think originally I had a stop here on the low of day, and then I move it. Well, I have not moved it. I'm likely to move it up. Uh, Depend on how it behave on Monday. If if it go higher, I might use this low of day Friday as my stop. Okay, that's I want to raise my stop on a lot of tech name because I do believe, as I mentioned, I'm in the camp that a recession is coming, and if there is a recession, if history rhymes that we have a slew of really bad data between now and Christmas, then I don't see how the market is gonna hold up. Right? All right, let's move on. Well, let's finish the Max 7 with the typical tech. Adobe, ugly, tech sell-off, um, is expected. But the green candle yesterday, eh, that's not bad. All right, nothing to hate here. I don't hate Adobe here. Right? Can it um, can it fill the gap? Yeah, but on any pop, right? Be careful. The what I now that we are down here, no doubt, trimming in this gray zone is a wise thing to do. If there is a bounce going into year end or Thanksgiving, okay, so be careful. Be careful. Okay, if not, sure, would I love to see Adobe get back to 580? Yeah, absolutely. But for now, 500 might be the first spot to trim. IBM, nice bounce. Um, it was ugly. Wow. Okay, that, no other way to say it, but when you drop $30 in 2 weeks, it's after earning, yeah, it's not ugly. Now, I was watching it. Would I buy IBM if I see 200? The answer is yes, right? It didn't quite come down to that, but yeah, I like IBM down there. Do I think it can still come down there? The answer is yes. No rush, okay? No rush. CRM, I think I had ordered into trim. I my order was just above where it was. It almost got there. It literally was, I think, a nickel away from my trim zone. But I do think anything into this purple line, um, I'm not gonna move my order up. Okay, it's sure I missed it by, I think my order was like 365. Yeah, I'm gonna leave it there. So next time I revisit that area, I'm not gonna trying to squeeze another 25 cents or whatever because it has moved across the purple line, have moved up a couple days later, but no, I'm just gonna leave it there, the trim. Okay, it's channel high. Gotta be disciplined. Cisco, uh, there is no reason to be in Cisco for me. None. Earnings gonna come up, and would I consider Cisco in the 50? Yeah, down here. Okay, but not chasing. Not chasing. All right, let's move on to FV. Wow, hats off. Hats off. Okay, great company, fantastic company. Um, I don't have any in it, so no skin in the game. Was looking forward to be able to have skin in the game down here. Okay, I was looking on this weakness coming down. I'm just like, all right, it's coming down here. If it tests the 100, it would be easy peasy to sell put spread down here, as I have done before. But no, earning fantastic, pop. Now, am I ready to flip this into a fifth extension? Not quite, right? Give it a week or two. If this thing drift back down, then I might change this fib retracement to have a high up here. But until it show me that it can go higher, then I'm gonna keep this fib for now. But can't hate it, okay? I'm not chasing it. I would recommend anyone chasing it, but wow, impressive. How high can it go? Let's do this. Let's do this to see if there's any kind of, okay. That kind of makes sense, right? High, 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 yeah. Maybe this is the top. Maybe. I don't know. Time will tell. All right. The big disappointment, Merck came down a full full completion. Wow. The one thing that I'm still pretty bad at, and it's up to me. Okay, when it comes down to trading and discipline, the word discipline have probably been talked about on a daily basis in my mind, and I repeat it as often as I could. If there's anything that I should be much better after many years now of trading, and I still violate it, is being disciplined, right? Those that follow me for a long time know I talk about falling out of a channel. The right thing to do is once something fell out of a channel, and this is a very well-defined channel, okay? Look at that channel. It's danger, okay? It's danger. And the right thing to do would have been to set a stop here at this fib right here, because it fell out of the channel, it tested the fib. The right thing to do was to put in a stop there, because I can always rebuy, okay? It can always rebuy, and I could have, see, this would have triggered the stop at 107-ish, and then I could have saved myself 6%. It is that simple. It is that simple, right? I'm gonna just keep repeating myself that, like, once something fell out of a channel, you have to be disciplined. It doesn't matter how much I like the company fundamentally, right? That's where the mind um, struggle. My mind struggle is when I like a company fundamentally. Sometimes that that side of my brain take over the discipline side of the TA, and there's no excuse. Okay, I anyone that know me, I don't have any problem admit my mistake. It is what it is. You can apply that to TLT as well. It's just sometimes you have to be disciplined. There's nothing wrong with getting stopped out and buy back in. And yeah, it would have been easy to save 6%. Easy, easy, okay? Sure, hindsight seems simple, but hey, if I love Merck, I love it more here, okay? And yes, I bought 100 more. Yes, I did. I, I had the cash, so I said, why not? It's so silly, so I bought 100 more. So it is what it is. Would I add more? If you don't have Merck, it's about as good as it get, right? It's about as good as it get. Biogen, same thing, okay? Same thing, but not a huge of a mistake as Merck, but still, I like, you know, no excuse made here. I like the company fundamentally. They actually had good earning, guide up. Now, is it a surprise that the tax loss was vicious here? No, the stock was down $80, $80 from the high. Okay, so there's a lot of pain in this. Okay, so where the earning, okay, first of all, they beat earning, they guided higher. The one area that they disappointed Wall Street in their earning report was, it shouldn't be a surprise, Alzheimer. Their Alzheimer drug came in low, a lot lower than analyst expectation. And for those that know me, I am not a big fan of that drug. I talk about it. The report of the effectiveness of that drug has been widely written that it is not effective. It's expensive, and I don't see, if you buy Biogen because of that drug, you're in the wrong. Okay, look, Go back 3 years. You see this run up was because of that drug approval. And now nobody should be hanging their head on Biogen future on that drug. Buy it for the other drugs that they have and other potential. All right, so let's move on. Eli Lilly, woo, nasty. Okay, this is the weekly chart. So it did come down to the 50 weekly moving average, something it has not seen since, look, March of last year. It's been a long time. Ugly, ugly here. I have no position, none. And it was tempting. Okay, it was tempting to add. I had ordered in down here and never got there, so it never went as low as I expected or wanted. Right? I figure on October 30th, after this nasty day, that the market, missed the market, would take it down. You know, but it didn't. Kind of surprised me. Now, the if here's a big if it hang on the 200 for the next couple days, perhaps it's also a good entry to get in because of the fib. Okay, so it at the fib, it at confluences of a couple support lines. So give it a couple days. If it shows that it can hold, might not be a bad idea for me to get in. Okay, so until then, no dice. Vertex, I'm out. I got stopped out. The stop kicked in at right here. Yeah, unlike Merck, I was smart enough. um, I just need to be key harping. I just need to be more disciplined across the board. Okay, it's I'm sure all traders out there will admit that if they can be more disciplined like a robot, they would do much better. Would I buy down here? Absolutely. Okay, if Vertex come down to the 450 to the 200 MA, test the fib, even test the ref low on an overshoot, yeah, I like Vertex coming in to this area. Okay, nothing right now, no exposure. Biogen, not Biogen, Pfizer, meh, into support, 200 MA, yeah. If you want to buy back into it, you can. It's like I said, earning report decent, but the market didn't like it. Nothing to do, nothing you can do. All right, it's the sector outside of FV. Okay, there's a couple clear winner. FV is one. I'm trying to think of other winners. I think Bristol Myers, something I don't talk about. Okay, Bristol Myers is decent. Yeah, Bristol Myers, but maybe J&J. Now, would I chase Bristol Myers here? No. But I talk about the last time I talked about Bristol Myers was, I think, back here or back here, right? When it gap up, I talk about it, and then boom, it go. So J&J, how J&J? Yeah, struggle. Okay, so it's not as ugly. It looked more like a Vertex chart than a Pfizer chart, but yeah, there's not a whole lot of winners in the big pharma this year. Not a whole lot. Okay, not a whole lot. I mean, this chart looked like that, but come on. Let If you look at since December, since Christmas, it's up $5. Okay, it's ugly. The whole sector has been not loved for the most part, right? So it's not like it has been a a big winner. Last for this video here, for this sector, I like Novo Nordisk here. It came down. This is a nice, this is the kind of reaction you want to see. October 30th, nasty candle, but then that could be the bottom. Look, it filled the gap. Okay, it filled the gap. So yeah, not a bad idea. Okay, not a bad idea here. Of course, I have no position. I was too heavily weighted. Okay, on the last 2 days of this week of the month, I waited like, should I buy back into Novo Nordisk or buy more Merck? And in the end, I put my money with Merck. Does not mean that I won't buy back into Novo Nordisk. I sold at 119. So yeah, hey, I did something right sometime. uh, yes, I sold out my position at 119, and I wouldn't mind buying at 109. Okay, I wouldn't mind at all. So come on down, and I might even sell some put spread down there. It's down 35%. No, no surprise on a tax loss there, right? Let's talk financial. I'm all out of Visa, all out. I didn't like this. Okay, for those that know the tweezer, okay, the tweezer is always not a good thing. When you have double tweezer, that they call it. Well, tweezer is basically two wick like this. Yeah, it's what that does is show you that the seller was lining up to get the F out 2 days in a row. So can it fill the gap? Yeah. Where would I buy? Here, Reflow 50 MA line up here at 280, 281. I'd be back in. Okay, I'd be back in. I would love that. All right, so for me, that's my plan on V. But until then, not chasing. Okay, Goldman Sachs, I have nothing. I'm out of most financial. I'm out, right? Except for another stock that I will tell you about shortly after this. But for now, would I chase Goldman Sachs here? No. Where? I would say for me, the 200. By next week, the 200 will line up with the Reflow here. Yeah, that's a good 10% below where we are right now, right? But yeah, I'm not a fan of Goldman Sachs up here. I am willing to be patient to let it test the 100 and below. Morgan Stanley, same thing. There is no reason for me to chase it here. Would I buy at the gap fill? Yes. The gap fill, channel low, 100 MA, I'm there. I don't need to go to 200 to be excited, but I will be super excited to be able to buy back at the 200. But for now, that's it. Good enough. Okay. Uh, let's go real quick on TD. That's the one. This is the one financial that I did buy in. I bought at my first buy was 55. I think it was 55.5 was my first order, and then 55.15, and then 55, and then 54 something. So yes, I am in. I think the lowest order I had was 54 point. Dare I say 95 or 85, something like that. So I bought a couple times. So yeah, more orders below. Okay, 54, I'd be in much bigger. But I like TD here. Energy, USO, and I sold put spread on this down drift. Would I chase it here? No. Now, if USO come down to the low 70, by low 70 I mean 70, because it is already low, then I would consider doing 68 to 66 put spread. Okay, if there is enough juice, but yeah, no need to chase it. No need. No need. All the energy name, Oxy. Where's Warren Buffett? Right? Where is he? For a man that loved it at 58 last year, where is he? Nowhere to be found. So, but out of the big oil name, I think it's the best one. I would buy Oxy here if I want to allocate money into this sector over Chevron, over uh, ExxonMobil. Yeah, that's an ugly candle. Look at that thing. Just no, no dice. Okay, no dice. Let's close this out on gold. Gold held up a lot better than I expected, because the way TLT, gold, GDX should do well on weak economy, but the fact that it kind of separate itself from TLT and ran hot with the stock market, that's kind of crazy. Okay, that's kind of crazy, but it would be wise to trim gold. I would not be buying gold here. Not, okay, not right now. I wouldn't chase it here. Would I trim into the all-time high? Yeah, that would be a wise thing to do. Okay, nothing moved up in a straight line. Nothing wrong with trimming at 258 right here. Okay, nothing wrong at all. GDX. Now, this is the one that I like. Of course, I like GDX down here. I don't like GDX up here. Could this be a new channel within a channel? Right? Look, let's draw this potential channel. Look at that. Touch, 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 touch. Right? So, is this a channel within a channel? Another channel higher? Let's duplicate. Yeah, it's worth doing it, right? Look, it's so busy. Look at this chart, it's getting busy. See, channel low, channel high, channel low, and then almost got to channel high, but channel low, channel high, channel low. So for those that want GDX, to add to GDX or to buy into GDX, I think this is a decent spot here. I saw put spread going out next Friday, where 38.5 and 38. Okay, to me 38 is no brainer. Okay, that's the ref low, and the 100 MA coming up, right? So sure, can you fill the gap at 37.25 area? Yeah, that's also another spot to buy, right? So I'm 75% out of my GDX position since this point right here. Since 40, between 40 and 41, I sold a lot. So would I buy back at 38? Well, I start to sell at 38 and 39 too. Like I said, I at one point I had, I think, over 900 shares of GDX. It's down to 200 now, or 250, something like that. But yeah, I like GDX here much more than GLD. Okay, to me, GDX is once again a bargain compared to GLD. That's it. A lot of rambling today. Enjoy the rest of the weekend. Bye bye.